Bismillahirrahmanirrahim. Assalamu alaikum wa rahmatullahi wa barakatuh. Welcome to the CIFA series on Islamic finance. In this first episode, we're going to update you on the Sukuk market. You may recall that on October 29th at the World Islamic Economic Forum, the United Kingdom's Prime Minister David Cameron announced two important initiatives. The first of these was that the United Kingdom should become a leading Islamic financial services center alongside Dubai and Kuala Lumpur. The second was that the United Kingdom will issue a £200 million Sukuk in 2014. Why does this matter? Well, since the 1960s, when London became the epicenter of the Eurobond market, London has become arguably the world's most important financial center. Although smaller in volume than New York, London serves Europe, the Middle East, North Africa, and Africa, as well as parts of Asia. Even New York-based banks use London as their center to serve these international markets. London has also enjoyed a traditional role managing capital flows from the Muslim world. Historically, these flows were defined in conventional terms. Yet the market has shifted in the 1980s with the emergence of Islamic banking and finance. The treasuries of Islamic banks had to look for means to manage their extra capital. What would they do? They used commodity murabaha. And where did they find the commodities to buy and sell to conventional banks and other banks? In London at the London Metals Exchange. Having replaced traditional interbank lending with buying and selling of commodities, London became the key service center for these Islamic banks, whether they were in the MENA region or even East Asia. When the Sukuk market took off 10 years ago, British bankers from HSBC assisted Malaysia and the state of Qatar with their first sovereign Sukuk issuances. In addition, bankers from Citibank London assisted the Islamic Development Bank with its first parastatal issuance. Today, London Stock Exchange hosts the largest volume of Sukuk with 49 transactions and values of more than $34 billion US. Within 2 weeks, the British Prime Minister has made two important announcements regarding Islamic finance. The first was on Eid al-Adha in the middle of October 2013, in which he announced that the United Kingdom would offer Sharia-compliant alternatives to conventional small business loans and conventional student loans. The second, of course, was the announcement of the World Islamic Economic Forum regarding London's place as a capital for Islamic finance, as well as the 2014 British pound Sukuk issuance. What is the benefit of the UK's proposed Sukuk issuance? Within a market that has enjoyed over US dollars 97 billion of issuances in 2013 up until the end of September, the UK Sukuk issuance is very, very small. Yet, this transaction will solidify London's role among the secular global centers as a key first mover for Islamic finance. In addition, as key centers compete for their share of the Sukuk market and Islamic capital market flows, London would be the first to set domestic rules with its own sovereign issuance. This would create a sterling benchmark, helping to entrench the pound as one of the key reserve currencies used by Islamic investors. Moreover, the 6 Islamic banks operating in London require high-grade sterling investment to comply with Basel III. These banks would be able to hold a liquid, highly rated issuance from their own sovereign. Even Islamic banks in most Islamic countries lack this type of domestic tool. London would join Malaysia, Bahrain, and Turkey in a very small elite club. Beyond supporting the Basel III needs of Islamic banks in Britain, the Sukuk will establish a reliable benchmark for sterling transactions by Islamic banks and investors. Like officials elsewhere, British politicians and authorities have been discussing a British Islamic bond for many years. In most countries, capital market and tax rules need to be updated to facilitate sovereign and corporate Sukuk issuance. But the United Kingdom has addressed most of these issues in a systematic manner since the early 2000s, hence the LSE hosting more Sukuk than any other exchange. The barriers to the UK sovereign issuance have been political. Like Egypt in early 2013, many British MPs complained that a Sukuk would require the United Kingdom to sell a national treasure to foreign investors. Other British MPs raised the issue that the explicit use of the term Sukuk and adhering to Sharia guidelines puts the UK's secular heritage at risk by giving preference to a single faith. Prime Minister Cameron argues that the technical details governing the sale of a national asset have been resolved, and the repositioning of the Sukuk argument has been to show inclusive secularism. In the past, 2008 and 2010, when the question of a UK sovereign Sukuk came up, the full support of the then Prime Minister was not shown, and the idea, which was floated between technocrats at the FSA and members of the Parliament, went silent. Making a very public announcement at the World Islamic Economic Forum, the Prime Minister has given his full commitment to the project, and many delegates at the WIEF felt that this makes the issuance inevitable and puts pressure on the Prime Minister to deliver. As 2013 draws to a close, inshallah, 2014 will bring a successful UK sovereign Sukuk issuance. Thank you very much for joining us today. Wassalamu alaikum.